If you're in any of the following 3 stages, then it is time for you to open a money market fund account, and I will tell you what you should do to maximize the potential for your particular stage. Stage yako ni gani sasa? We will find out. Join me as we learn so that we get the power to break the poverty cycle. You see, at any given time, we all are in one of these financial stages, and identifying where you are, itakuhelp sana guide what is it that you should be doing with your account and what is the expectation from your money market fund account as well. So in a summary, stage 1, you are at point 0. And this does not necessarily mean that you do not have anything with you completely. You can also be at this point where you have a goal to buy or pay for something and you want to start from scratch, kuisevere as pertaining to that goal. Whether you are at 0 or you are out to save for a goal, his stage, let us call it stage 1. Tuangalie stage 2. This is someone who has been accumulating or saving and has some good amount, but ana need to multiply it in order to achieve even a bigger and a better goal. This could be someone who has been working abroad, maybe Gulf, or whatever it is, or even locally, or had a policy and you mature after saving for so many years. This is that place where you have a good amount of money, but it is not enough to sort out your problems or get you the kind of asset, business, or thing that you want. They could still be working or looking to multiply their money through a business. Wacha tuangalie stage 3. This is someone who has a good lump sum, pesa fulani yako nayo, whether it is liquid or in another asset, and this person is thinking of earning passive income. Some of the examples include people who have been raising money through long-term savings accounts. Now, some of them are disposing of properties ambazo wako nazo which are just lying there. They want to turn them into paper assets, and others are receiving their retirement payments, some benefits, and finally others are receiving a big payment from I don't know what, they just won the lottery. So I'll start with stage 3. At this stage, your money should quickly turn into an asset. This is also known as paper assets. If you're living in the 1990s, then in the place yenye everyone was rushing to build rental properties because the goal was to build an income generating asset. Isn't this what most of the retirees, by the way, used to do your times? And some of them are still doing the same right now. If you are at this stage, then your money should be working for you, creating a passive income. And this is where you need to use your money market fund to start generating you a passive income. This should be your ultimate goal. And everybody thinking about financial freedom, this is what you should be focusing to. Please, you can make money while you are sleeping. So by having this lump sum, it can generate a constant income without having to go working for it. For example, if you have 10 million pension lump sum or umeuza property yenye iko worth that amount, this can translate into an average monthly passive net income of about 115k, considering an average interest rate of about 16.5%. And how did I arrive at this? Subscribe so that you don't miss the video that I will take you through this step by step. In your part, if you can try not to withdraw the entire interest or income, the better for you, since this will help increase your principal through compound interest, and therefore your passive income will keep growing as well. Let us look at the next stage. If you're in stage 2, then you have done very well, my friend, and you have taken several steps in the right direction. You perhaps have raised tens, maybe hundreds of thousands, perhaps maybe you can a million or two here and there. However, this is not enough to earn you a sufficient passive income. Therefore, your money market fund needs a boost. As time multiplies your investment, you need to continue topping up your account if you are still working. The second thing that you need to do is to diligently find a way to use some of your money to open another source of income. This could be something like buying an asset or starting a business which you can run on the side, and the aim is to channel a bigger percentage of the returns from that business back into your money market fund account to grow it at a bigger and better. Let me use an example, and this is not necessarily something that that you should like jump out there and consider it as what you should do right now, because everybody needs to do their own research before they decide on what they settle for, because it doesn't work for everybody. So one of my clients who lives in Mombasa had accumulated about 800k, and after doing some research here and there, considering her money in the money market fund account was earning her something like 9k per month, she decided to take a step to split this money and bought a tuk-tuk at 400,000, which now became an income generating asset. Yenye inamhelp now to pump more into her money market fund account. So every day this tuk-tuk deposited about 1k, and therefore an extra average of 20 to 25k a month into this money market fund account. And almost a year down the line, she has two tuk-tuks, which means that an extra 40 to 50k per month is going to her money market fund account. Can you imagine how this will look like with growth? Yeah. So in summary, at this stage, your main focus is to find ways that you will multiply your seed. And last but not least, in stage one, starting from zero or planning to raise funds for a certain goal, your main concern here is not what interest are you getting from your account. As much as that is very important, your main goal should be accumulation. Come up with the percentage of income that you should set aside into your money market fund account. No matter what happens, try and remain consistent. Top up the same anytime that you earn. Why is interest rate not very important? As you have seen from the earlier stages, the 2 and 3, you will need significant amount of money to be able to earn what would sound as significant returns. So your main focus at this point is to accumulate and also look at an interest rate that is above inflation rate, to ensure that pesa yako hai lose value, it is invested and it is earning more than inflation. So let those little returns motivate you here and there, but just beware that at this stage your focus is accumulation, accumulation and accumulation. What you're doing is collecting the seed, kukusanya mbegu, and when you have enough, you can now join stage 2 and its strategies. So every stage you could be in is a good stage for money market funds. Before you diversify further, ensure first to build an emergency fund in a money market fund. Take a look at this next video over here to learn more about these money market funds. Welewe ni aje. Thank you so much for watching. For more information, check the description below. I can't wait to see you in this next video where you learn and we break the poverty cycle.